Welcome back to Investment 360 now. The risk that the Federal Reserve tapering of bond buying will hurt emerging economies by sparking an exodus of cash and higher borrowing costs is a dominant theme in the current investment landscape. And today, emerging markets serve as the world's economic growth engine, but are they decelerating? Kevin Lings, chief economist at Stanlib, joining me now in studio to look at where investors could be surprised on the upside amidst the imminent Fed tapering. Wow, I'm glad we're going to be surprised on the upside, Kevin.
Well, if you think about it, Bronwyn, there's unfortunately quite a lot of negative news when it relates to emerging markets and also when it relates to South Africa. And as I travel around South Africa and attend various functions and forums, I'm hit with a lot of negative perception about South Africa's economic performance, South Africa's growth rate, and it almost feels as if there would therefore be no investment opportunities within South Africa. And therefore you have to take your money offshore, and then when it comes to offshore, you're debating where you should go and which currency. What I think we can focus on a little bit is, are there investment opportunities in South Africa? In other words, are there some positive areas that you could exploit within your portfolio? And what are the themes or thoughts around that? In other words, in the world that we're coming out of, we were investing on the back of chasing yield, or at least the world was. So we attracted a lot of money because we were offering the world a relatively high yield, and so did a lot of other emerging markets. When you go into a tapering environment, that source or that chase for yield disappears a little bit, and people start to look at another investment thought. What is that investment thought? And in my mind, that is, we chase growth. What we're looking for
is... Where's growth? Right, okay. So let's chase growth.
So what we're looking for is growth. In other words, we're looking for outperformance in terms of rands and cents. You're selling more stuff, top line growth, coupled with another dynamic, and that is pricing power. And if you find a sector that has got those two components in this world, it's very attractive. Now, we've accepted that the world is not going to go back to the growth rates it had before, and as you said at the prelude, emerging market growth is not as exciting as it was. And even if you look at the developed world, it's picking up, but it's going back to what, 2% growth. So you have to accept that the world is in a lower growth environment, and that investment...
Which is the discussion we've just had with Helena.
That's right, and investment returns will be lower. So what do you do in that world?
You get angry clients.
You get angry clients, and you don't get your yacht. I'm quite keen on her yacht, but if you say to yourself, how do I protect myself a little bit? You look for those segments now that are growing, that have pricing power. Now, each segment on its own, or each theme on its own, is not enough to fill up a portfolio. But if you put them together, you start to make a construct of a portfolio. So let me give you an idea. The first would be education in South Africa. If you go back and look at the recent results we've seen out of the education companies, something should strike you. One is that, yes, they're investing for the future, which is actually quite rare in South Africa, but they've got two components. One is that they're growing their top line quite fast. In other words, they're getting more and more business. And the second is that they've got pricing power. They can put up their fees by way more than the inflation rate, and they do. And going forward, they're going to continue to do that, because the growth for education is going to continue to expand, and their pricing power will remain in place.
So this is a theme that we can get excited about.
So I like the education theme. Now, that doesn't mean that you invest in Advitech or Coro, or you would have to decide where the value lies, and maybe those shares are a little bit expensive. But it's a theme that I think is going to play out over a number of years, where you've got some growth in a low growth environment, or you've got above average growth, but you've got pricing power.
But I can't let you get away with that, where you say, I'm not sure whether you go Advitech or Caro, etc.
Well, Caro
where's the entry point? Where would you go now? Caro's expensive.
Caro is very expensive, but think about it not in terms of, yes, it's got a high PE ratio now. Think of it maybe longer term. Think of it over the next 5 years. Is it then going to still be expensive? And from my perspective, that's the type of environment you've got to look at, a longer term growth, sustained growth. And I think that the education stocks will do that.
Do you
and
get
I think
excited
Coro
about
will do that.
Africa and education?
Yes. So maybe we can just go through some of those themes and identify them.
And I'll stop interrupting you.
Yes, but I want to stress this. No one theme is big enough to fill up a portfolio. We would love at the moment if you had a financial sector theme. Fill your portfolio with banks. We would love if we had a resources theme. Fill your portfolio with a whole lot of resource shares. There's enough shares to make up a portfolio or to dominate your portfolio. At the moment, where you find the growth, they are niche themes. They are niche sectors. And so you have to go and look at all the different components. So to me, Africa is a good theme. In other words, either investing directly in Africa and including in your portfolio a mix of African products.
This is interesting. Can I interrupt you
Yes.
here? This is interesting because have you generally been excited about the Africa opportunity, or is this only starting to occur to you now?
No. So what you can see is that this has been building up in the background. These themes are not new, but they've been kind of a low-key event because the world was dominated by a search for yield and ever lower bond yields, and what that meant for how you placed your portfolio. You take that away, you take away the QE and what that means for bond yields, and you now start to look at, where are the other themes? And I think what comes out of it is there are some growth areas. In other words, there are some positive aspects in South Africa that you can invest in. You just need to go and do some homework around them and start to fill up your portfolio with a range of shares that don't necessarily have one nice, neat, all-encompassing theme.
So this is a diversification strategy of themes.
100%.
We've got education.
So
we've
education
got
I like the Africa theme. I like the investing directly in Africa. I also like the transport into Africa. You must remember a huge amount of goods are moving from South Africa into Africa. So the logistics around that I think does well. And there are many companies that have that logistic arm in South Africa.
Any preferred company there?
Well, you would have a look at, say, Imperial or, Bidvest. I thought their numbers were good, more outside of South Africa. But also, if I could just pick one theme, and that would be warehouse space. Now, it's difficult to go and fill up your portfolio with just warehouse space. But warehouse space is at such a premium in South Africa simply because of the transport of goods into this country, within the country, and then north of the border. And there's a shortage of warehouse space, partly because there's a shortage of property.
Sounds like a good business to go into. Don't worry about the investment landscape. Go and find yourself a warehouse to buy.
The other area that's gone amiss in this country is tourism. I don't understand why it hasn't reached headlines that right now in South Africa we're getting more tourist flows, money flows, than we did at the peak of the Soccer World Cup, and it's been consistently at that peak. And yes, a lot of those flows are coming in from Africa, where people have got a lot more money, a lot more wealthier, moving into South Africa, spending some of that money. But it's a nice theme that's starting to play out within some of the hotel groups, and we've seen some of those hotel groups start to expand. Sun International, I like their expansion. It's long overdue, but it gives you some idea that they're starting to see better numbers. Domestic tourism, yes, is fine, but the international tourism is picking up. The other theme I like is healthcare. Now, healthcare constantly gets plagued with this idea of a competition commission, that it's going to be
regulatory issues.
All of that. Quite frankly, it's been around for years and years. I think the healthcare companies, whether it's Netcare or Life, they have great operations. They've learned how to deal with all of this regulation overhang, and I think they've managed that. And to me, Netcare is a superbly run company. I think they're on top of their UK operation. But think about what they've got.
And Richard Friedland is a vet and a doctor. Did you know that?
I know he's a doctor. I didn't know he was a vet.
Well, that's got to increase the investment case for Netcare.
But think about what healthcare's got in its favor. It's got growth. The demand for healthcare is only going to go up in South Africa. And the second is it's got pricing power. Whether we like it or not, and whether we object to it or not, it's got pricing power. And so the combination is a very effective combination for South Africa. The other area I would look at is luxury. Now, you see, I think in this world, there's a tendency when you have low growth world is you want to go defensive. You want to say, well, we're going to sell food, so let's buy food products. I don't know that that's a good option.
But luxury can be defensive. You look at Richemont.
Exactly, because you've got, again, two things. Emerging markets that under-own luxury goods and pricing power. You want to see a company that's got pricing power, it's a high-end luxury good. They don't discount their products, and they seem to be able to get that because simply the aspiration is there and the aspiration continues to grow. So in my head, if you start to explore some of these things, which are more positive, remembering to combine two things, growth and pricing power. And then I think you start to fill up a portfolio where you can start to get slightly above average returns. What you've got to realize is the returns of the past are not going to be repeated because ultimately the economies are not growing at that sort of vibrant pace, and South Africa is not expected to accelerate growth dramatically. And a lot of the growth that you could experience is already in the price. Our market is no longer cheap. So you must have a realistic expectation of what's possible. But I do think there are selected opportunities.
Now, what about this other theme? So yes, we've discussed education, health, transport, luxury. Have I left
Tourism.
anything? Tourism. Those are 5 strong themes. What about emerging market versus developed? You started at the top of the discussion saying, yes, anemic world from a developed perspective and a deceleration potentially in emerging markets. Do you structure your portfolio taking into account those 2 themes that are unfolding globally?
Well, look, there's no doubt that developed markets are now on the ascendancy. Their growth rates are going back to kind of trend growth or close to it, and emerging markets are losing a little bit of momentum, and they've got a lot of challenges ahead. And I think maybe we got too complacent about how fast emerging markets would grow. The theme that strikes me
the party can't go on forever.
Exactly.
We've got to accept that.
Right. And you've got to ultimately, there's a difference between growth and development. Emerging markets lack development. They've achieved the high growth, but they haven't developed the core of their economy, which is education, healthcare, environmental issues, all kinds of things that you need to sustain growth. Now, in my head, what this has taught me is that overwhelmingly the world is not decoupled. In other words, emerging markets go softer in part because the developed world was itself struggling. And as the US picks up and Europe picks up, it'll draw out a little bit more growth out of the emerging market world. So the theme coming out of that is that you have to play it in terms of a global perspective. You can't simply say, I'm now targeting an emerging market world. I like the idea of luxury, but look at where the luxury companies themselves are targeting, China, etc., for good reason. So I wouldn't worry too much about targeting emerging markets versus developed. I would leave that in the hands of the company
that
to
are
select
striving for growth.
where they know where the
sense.
growth is. Richemont knows actually better than us where the growth is. And they will place their stores and open their stores in the areas they feel they can benefit. My argument is invest in Richemont. Don't worry about which emerging markets the next thing, or whether the US will outperform some other emerging market. Invest in the company that does a huge amount of research on where those growth rates are coming from. Aspen, I think, also does a superb. It's in it's in healthcare. It manages that
There's
exceptionally
no stopping
well.
Aspen and Stephen Sard in terms of the growth potential that we're seeing.
That's right. So let Aspen, and if you look at where they're opening up operations, Aspen's doing research on where those operations will work well. You don't have to worry about which countries. Don't
leave it to Stephen Sard.
Exactly.
Is what you're saying.
Those guys have got a proven track record. So I'm not too concerned about geographies at the moment. The world is coupled. I want smart companies that know how to find the growth wherever it is. South African Breweries, I think, is a very good example of a company that can do just that and very successful at finding that growth. So I think that if you are worried about geographies, focus more on big dynamic companies.
Housing environment in the US. Tell me what's happening there. Can we get excited?
Well, just to break away from all of that, one of the key things that we need to focus on with this QE tapering is that obviously the prospect of tapering comes closer and closer, bond yields have sold off. The problem with bond yields selling off is that they potentially deflate the housing market, make housing more expensive, and if that happens, that can stall the US recovery. So if you ask me what is the single biggest risk with tapering, is that the US housing market stalls at the time when it needs to be gaining momentum. So to me, when I look at the US, what I'm looking at is the housing data very carefully to see if that's happening. In other words, to answer this question.
Do you think it is happening?
No, it seems to be holding up. Now, the new home sales last week were a bit of a shock because they fell off very sharply, but house prices seem to be holding up very nicely today. So from my perspective, the housing market appears sustainable.
But isn't that concerning? One data point on the housing environment negative and another positive. I mean, there's not much consistency there, so it's difficult to read a trend.
No, but I think if you look at a range of data, don't just have a look at everything from the affordability of house, new home, building permits, existing home sales. Have a look at a whole range of data and take out of that where you think the trend is. And to me, it's in a recovery phase. If I look at the house price growth, every major city in the US is showing an increase in house prices, including Detroit, which is strange. But it's not as if it's just selected markets, it's broad. And as long as the housing market continues to recover, the Fed will feel more comfortable that tapering is sustainable or digestible within the US.
Kevin, thanks so much for your time. Kevin Lings, Chief Economist at Stanlib. That's it for Investment 360 this evening. If you'd like to send us feedback or suggest guests for the show, contact me on @BronwynNielsen. Your handle? At
Lings Kevin.
Kevin. At Lings Kevin. After the break, stay tuned for Hot Stocks as independent analyst Singa Gongqisa and Paul Turan, our resident expert from Vestact, discuss the banking sector.